Well, another great day comes to an end. Hope you guys had a fantastic day out there, but the party continues. It's time to get back to work tonight, Tuesday evening. It's May the 18th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the S&P, the NASDAQ, and the gold, the yellow metal on our radar for tomorrow. Speaking of tomorrow, boy, quite some big moves to the downside today on the E-minis. S&P's down, NASDAQ is down, and got some strong trends on the E-minis, but some range-bound markets on the gold. So I'm looking to sell pullbacks and retracements and maybe some reversals on the E-minis tomorrow. And of course, gold is range-bound, so we're trading failures, we're trading breakouts, and got some pretty great trade setups on my radar for Wednesday's trading session. By the time we're done with this video tonight, you'll know all my favorite entries and exits I'm looking forward to on Wednesday's trading session. Now, of course, before we jump in and get this video going tonight, I just want to make sure to remind you guys, make sure you subscribe to this YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe to our YouTube channel, and when you do, hit that little bell icon so you always get notified every time I publish something new. And also, don't forget to, if you have any questions for me tonight, you can always drop those questions for me in the comment section. I always appreciate the opportunity to answer all your questions, so don't be bashful about asking questions. And if you guys tune in every evening, if you love this video as much as I love making it for you every evening, do me a big favor, hit that like button, that thumbs up here for me on this video newsletter. Always appreciate you guys supporting this YouTube channel, but make sure you subscribe, drop those questions, and thumbs up if you guys are digging the content here on this YouTube channel. But enough of the intro, though. Time is ticking. Wednesday is right around the corner. This third week of the month continues here, and of course, charts are already here. Get some big, boy, quite a difference a day makes, right? Now, get some big down days, right? Big move down on the S&P, big down here on the NASDAQ, and a range, right, on the gold. So it's a relatively straightforward plan here for tomorrow. We get strong trends on the S&P and the NASDAQ. That means I'm looking for pullback trades, or in this case, retracement trades, right? Selling pops. I'm looking for potentially ranges tomorrow, right? A lot of times these big moves will go sideways in ranges. And then, anytime we see a big down day today, there's always potential for a reversal. So I'll tell you, I would love to grab a reversal on either one of these tomorrow. It might not be as easy as we think. So we'll talk about the best way to trade those reversals. So I'm looking for pullbacks. I would love to get a reversal if we can get one. And I would be expecting to see some ranges tomorrow at some point tomorrow on the E-mini and the NASDAQ. Or in the gold, gold's pretty range bound, right? Gold is definitely a sideways market. We're buying low, we're selling high, we're focused on failures, and we'll keep an eye out for some breakouts tomorrow. I would love to short the next pop on the gold right now. I've got my eyes on some short side trades on the gold here. I'll talk about why as we dig deeper into this video. So, I'm looking short on pretty much everything. Short in the pops on the S&P and the NASDAQ. And even though we are overall bullish in the gold, I would love to try to pick some tops on that gold as we go back to those range highs tomorrow morning. Now, I'm going to go over all the details of each of these markets as we go throughout tonight's video newsletter. Before we do that, though, let's just make sure we get on the same page for tomorrow. Tomorrow, of course, is the Wednesday of the third week of the month of May. Third week of the month, as you guys probably already know, means OPEX is on Friday. Now, we, of course, trade futures, right? So we're probably not going to get that big of an impact from OPEX, but that does tend to, we do tend to get an increase in volatility as we go closer to the expiration day on Friday morning. So probably not going to have a big impact on us tomorrow, but we'll definitely be looking at that more on Thursday and Friday, and we'll touch base on that in the newsletters later on in this week. Speaking of newsletters later this week, first of all, I'm not going to be here tomorrow afternoon. I'll be out of the office for most of the afternoon tomorrow, so there will be no newsletter tomorrow night. So I hate to leave you guys hanging. I'm not out of the office very often. They keep me chained up pretty good here in this office here. So all kidding aside, though, there will be no newsletter tomorrow night. I will come back though and finish the week with you guys on Thursday night for Thursday night's newsletter. So I do apologize for leaving you hanging there. I don't miss newsletters very often, but unfortunately, every once in a while, I do have to get out of the office for some meetings. So no newsletter tomorrow. As we look at tomorrow's schedule, we get a couple big news events on my radar for tomorrow. The big news, of course, is those FOMC minutes at 2 o'clock. That's kind of the big scheduled news for tomorrow. But as I mentioned in last night's newsletter, the markets have been obsessed with interest rate. Well, they're obsessed with this idea of inflation, right? The Fed's been telling us inflation is only temporary. It's going to go away here. The reality is most of us, I don't think, believe them, right? Or we worry about it, right? So the markets are worried about that, right? Because what's going to happen is if inflation stays elevated, the Fed will have to raise rates to kind of cool off the economy, and that will lead to what will likely be a relatively big pullback in the equity market. So that's why tomorrow, these Fed speakers, you've got Fed Speaker Bullard and Quarles tomorrow at 10 o'clock Eastern time. I think those are going to be potentially the big market moving events tomorrow morning in our trade room. 10 o'clock has always kind of been my favorite time to trade, between 10 o'clock and 11 o'clock. So again, the big news tomorrow is the FOMC minutes at 2 o'clock tomorrow afternoon. But honestly, I think the big action tomorrow is going to come in the wake of those Fed speakers. What I'll be watching for tomorrow on my news feed is to see if they mention anything about inflation, tapering, QE, stimulus, right? Remember, Jerome Powell, the head of the Fed here in the U.S., has made it very clear they believe inflation is only temporary. They are not going to make any split-second decisions right now on removing stimulus or scaling back stimulus. What you want to be looking for tomorrow, what I'll be looking for tomorrow is do any of these Fed speakers, do they break rank? Do they go rogue, right? Do any of them tomorrow say, no, inflation's not good, we should make a move sooner than later? If that happens, that's those little words, right? Those are the magic words for us, which will probably end up in acceleration to move lower. Or, if they toe the line, it may produce that reversal we talked about in the introduction. So those are, I think, the most important events. I will be definitely listening in very closely to the news feed tomorrow, 10 o'clock, 10:15 into that 11 o'clock hour. And don't forget, tomorrow morning and every morning, we'll be in our trade room, 8 o'clock Eastern time, Monday through Friday. I would love to have you there trading right along with us. I'll put all of the membership links you guys need. I'll put all that in the description of this YouTube video. So grab that link, get registered as an advanced member, and I'll see you tomorrow morning at the opening bell, and we'll have a front row seat there for that 10 o'clock, those Fed speakers tomorrow. And again, I do apologize for no newsletter in tomorrow night's or no newsletter tomorrow night on Wednesday evening. Let's go to our charts though now. Get these charts all prepped up here. Charts are ready. Got the E-mini, got the NASDAQ, got the gold. Glad to see you are right here with me. Got a bunch of trends right now on the E-minis, starting off tonight right now on the S&P. As I mentioned last night, right, don't trust that long-term trend right now. And boy, they sure enough, the buyers did a pretty good job at pushing it in the pre-market. I'll tell you though, and we talked about this morning in the trade room, when we saw this market kind of V-top off that high, the writing was on the wall at that point. My initial thought was we would basically pendulum swing the amount up to the amount back down, right? And so they definitely have completed that move. Oftentimes when you get these V-tops in the pre-market, what will happen is the amount it goes up comes right back down again, and the other side of it, right? You can definitely see they did that and some on the opposite side, completing what is pretty much a big pendulum swing from the range we had, right, in last night's newsletter, right? This is the range from last night. The buyers, of course, got that pump up, which in all reality wasn't a big surprise. The long-term trend was bullish, but you can see when they came back down though, right? The amount of the move up is the amount of the move down, and you can see those three legs lower, right? 1, 2, and 3. So it's a trending market. This is not a range-bound market. One thing we know about big moves like this is the following day will often go sideways. So it would be a good idea tomorrow to keep that on your radar. Of course, we'll be looking for that tomorrow morning in our trade room, but do not be surprised when you see a market make this big of a move in one day, kind of like gold, right? Gold made that big move on Monday, and today it went sideways. don't be surprised tomorrow if we start seeing ranges going sideways here on the S&P, on the NASDAQ. Again, think about what happened on Monday with gold, right? Gold made that huge move up on Monday. On Tuesday, it goes sideways, right? So very, very common to see a range happen after a big move. We know we're bearish. It's a trending market. When I think about trends, I think about, continuation trades, right? Selling pullbacks. So my initial reaction is I want to sell the bounce, right? Sell the pops, short the bounces, whatever you call that, right? So, I'm looking to sell retracements off of this low. I would also be more than welcome because we've completed this pendulum swing. I would love to get a reversal, right? So, pullbacks and reversals are always kind of on my radar whenever we have a trending market. This is a pretty big trend. So again, keep your eyes open for a potential range here for tomorrow. So if I had it my way tomorrow, what would be some of my favorite setups here for tomorrow? There's a lot of really great opportunities I can see here as we, again, potentially get a pop off of this low. When you get these big, strong moves like this, remember that, anytime you see a big, strong move like this, the odds are very good. We're going to get that short and retest that low here. So I'd like to get this thing back up around the high of this channel. That can kind of be my first kind of favorite trade here. I've got my channel lined up. I like that spot there. What I'd like to do is get above the moving average, get those buyers to commit to the long side, and then just simply sell right into those stop losses, potentially with a combination setup, a failure into a pullback combination. Now, we see a lot of these, right? We saw one earlier here in the day today, right, where strong move down, we pop up above the moving average, the buyers try to buy it, you can sell into those stop losses, and of course, sell that pullback, right, as it goes. All you're doing is marking up that low, marking up that high, right, and you're shorting the top of that channel. This is the exact same thing I'm looking to do right now, right? So moving average coming down. Can I get above that EMA, get up around that the high of that channel, try to get these buyers to get long up above the moving average, get that failure, get that pullback, right, and then run that sucker back down to retest the low, failure into pullback combination. That's one of my favorites here for tomorrow. I would really love, if they really want to make me happy tomorrow, I would love to get back up around this area in that 41.5 area. If you're a client of mine, we call these the edges, right, of the trading range. You can see that edge right there held as resistance. So I'd love to get this area 41.5. The only problem though is if we get all the way back to 41.5, that's going to be a pretty strong pullback. And so if we do end up kind of, nestling into the underbelly of that trading range, the momentum of this pullback will be so strong that my second favorite entry would be a nested entry or a two-try failure, as we call it in our video class, right? Buyers trying once, buyers trying twice. At that point now, just like before, we know those stop losses, those pain points for those buyers are right below those lows. And oftentimes these will set up with a trap entry on the way back lower, because whenever you trap in that many, in this case, buyers, when the market fails, it's going to collapse and run lower. So again, these are called failure patterns, but again, these are a little bit more patient, right? Let them try twice on this one because of the strength of that momentum, right? Again, it's a failure pattern into a trap pattern combination, right, for a retest of that low. So my second favorite setup on the short side here for tomorrow. My third favorite, and it definitely will come into play if we have this trading range. Again, do not be surprised if we go sideways here tomorrow. What do we do if the market goes sideways? We find levels of resistance up above the top of that range, and we combine those levels of resistance with those breakout failures. I never trust a breakout. Never trust a breakout, especially when that breakout goes against the overall trend. So hopefully tomorrow we can get and again, I love ranges. If you're a member of my trade room, you know how much we love ranges there, right? Love trading ranges. Only problem is we got to wait for it, right? So wait for that trading range, get that pop up, and then use that failure pattern to get short above that high. And guys, as you can see, I'm talking a lot about these failure patterns right now. There are a lot of variations of failure patterns. I'm not going to go over all of them here tonight on this video, but I'll tell you, the minute you master failures, whether it be trend following or range trading, you're going to turn a big corner in your trading career. What I would do is, if you haven't done so already, I would grab our free trading course if you're serious about your trading career, because I go over so much about failures and traps, breakout trades, failure trades. I show you guys hundreds of examples of our favorite setups that we use every day in our trade room. I cover that all in that free trading course. So grab a little pop-up there in the upper right-hand corner, and you'll get a much deeper dive into all of the entry techniques, the entry setups, along with everything else we do with all of our clients in our trade room. So again, grab that little pop-up there in the upper right-hand corner. You can thank me later. You'll love that free course. It'll give you some great tools to succeed either with me in the trade room, right, or on your own out there every day in the financial markets. How about the last one here, right? We've talked about some pullbacks. We've talked about some sideways ranges. What if we keep going lower here? Because again, as I mentioned before, if inflation persists, if there is a whiff of tapering or slowing down stimulus, all of a sudden this big trading range we talked about earlier this week, right? This range where kind of last week kind of ended before it ran up right on Friday. This could easily now start to come right back down, and just like the pendulum swing above the range from yesterday. Look at that pendulum swing, right? That is very convenient. Now, it might be a coincidence, right? But as you can see there, that range below us acts as a magnet. And if this thing keeps going here, there is again, maybe not tomorrow, but there's a very good chance here we rotate all the way back down and take out some of these big lows here later on in the week. And I'll tell you, if any of those Fed speakers tomorrow even mention anything about tapering, that could be the firecracker, that lights the whole fuse here for that move to accelerate to the downside. So how would I sell short as the market goes lower? Well, this is a situation where right now we've completed our pendulum swing. We've completed a triple measured move. Right now, in all reality, a healthy, balanced market should pull back and give us a chance to get short here. If we don't get that, and the market, for example, takes off to the downside, that's when you start getting aggressive with more steeper channels, and you start getting in with traps overhead. That will be the my next favorite setup, right, as we go, right? Does that make sense, right? So, again, in this environment, 3 legs down, complete the pendulum swing, we should be due for a profit-taking bounce, right? We should be due for a bounce, right? Now, the market's the one that decides that, though. So if we pull back shallow and run lower here, now we know it's on, right? Now we know it's on. When that happens, I stop messing around with these wider channels. I go steeper channel now, and I start watching for traps, right? Now, I'm just simply marking this up right now, right? It might be something like this where it takes off the downside. I'm marking my steeper channel now. I'm finding my traps down here. So just be aware of that, right? It may not happen right away, but remember, right about now, we should be getting that profit-taking bounce off of this low. If we don't, that's definitely a sign of what I would kind of call a runaway market. And runaway markets are when you do not get picky about entries and you just simply short those traps above those narrow, steep channels. So that is the idea on this. Now, I mentioned earlier, right, a possible reversal. How would a reversal look like? There are 2 basic ideas for a reversal tomorrow. The same thing will apply to the NASDAQ. The reversal that's probably the most likely tomorrow is to get this, what we call a bounce reversal, right? Which would be where we roll over, we take out that low, and then we bounce, right, and reverse. There are 2 ways I like to trade these kind of bounce reversals, right? Now, again, I would expect there to be a sell off that bounce, retest that low. Once we get that, then I can look for two key kind of bounce reversals. One of them is going to be one of those nested failures, right? Bears try once, bears try twice, draw that trend line, right? And we're buying off that. Remember, let the bears, right? Let them try a few times and we can buy off that. What's basically a failure pattern, but in this case, it's applied as a reversal pattern, right? Again, lots of variations of these failure setups. I talked about this earlier, right? You'd be foolish not to grab that free course. If you haven't done so already, learn that stuff, because I'll tell you, once you master failures in trends, reversals, range-bound markets, you'll see a lot better results overall. So that is a bounce reversal I would love tomorrow, right? Again, anticipate it going up and coming back down, or maybe we don't, right? Maybe something happens here overnight. Who knows, right? Maybe something happens overnight. Maybe the market rips higher here. I mean, we are at a pendulum swing. We are, we're 3 legs down, for crying out loud, right? I mean, there's no reason why it couldn't, right? It doesn't look like it's going to happen, but it easily could. I don't care what direction I trade, but I'm not going to simply buy just because we're at support right now. What does a reversal look like? I'd have to, first of all, get a strong move back up, get above the moving average. But unlike every other time they went above the moving average, the buyers have to actually put some money in play here. They have to hold that pullback, right? If I can get this 1, 2, 3 reversal pattern, we call it, now what I can do is I can mark up that high, I can mark up that low, and you know where they're trying to go at that point, right? You know where they want to go. They want to get that high, right? They want to crush those highs again. So if we can get this, again, if we can get this 1, 2, 3 move, then I can easily now, right, grab that first pullback off the low of that channel. Okay. Now remember, we're not just going to blindly buy that pullback. The two most common entry patterns, or entry setups, we call them in our trade room, that we see there are going to be bear traps, right? Trap setups, or failure setups. Now, again, I'm not going to go over all those small details right now, but I will cover those again in that free course, little button up there in the upper right-hand corner. So if they grab that and get hooked up with that free course, that way the next time I say 1, 2, 3 reversal into hidden channel pullback, remember the first test is always the best test, right? I want to buy that first pullback off of that low, and targets, of course, are back up to retest that high. So got a pretty good idea now, got a great potential setup for tomorrow. We're ready, right? Now you are ready as well. And don't forget, tomorrow morning, 8 o'clock Eastern time, be there with us in the trade room. Now, the NASDAQ is very similar to the S&P, right? NASDAQ is also a bear market. NASDAQ also went 1, 2, 3 big legs down. The only thing I don't see in the NASDAQ right now that is kind of similar to the S&P would be we have not completed that full pendulum swing. Now, I will say the range, as I mentioned in last night's newsletter, the range on the NASDAQ was not as obvious today, yesterday as it was on the S&P. So maybe you look at this and go, well, there's 1, right? There's 2. Yeah, sure. That makes all sense in the world. But that's kind of the only thing we haven't seen on the NASDAQ that we saw on the S&P. The S&P did actually complete its pendulum swing. So, we're definitely not bullish right now. We're definitely a bear market. We're not range bound either. You can definitely see this is not a sideways range right now. It is a trending market. We've got a nice rotation right off of that high. And again, right, when you see these overnight moves like this, we saw this right away this morning. When the market makes these big overnight moves and comes right back down again, you can literally take the size of those up moves, project them right down again, right? And those will give you some easy targets on the other side. In this case, of course, I'm just using that pendulum swing right off of that high here. And you can see there's a little bit more to go. So we may slide a little bit lower here in the overnight Asian session here on Tuesday evening. So again, we know we're bearish, we're trending. When I think about trends, I think about selling pullbacks or selling retracements, right, as they say. I think about reversals. And when I see big moves like this, when I see 3 big moves like this, I think about ranges, right, the following day. Now, what is interesting here is we've also got this trend line up here. So just like the S&P kind of had that big, the S&P kind of has that edge of that range, right? Those two battle zones in the S&P. Same thing kind of applies here on this NASDAQ, right? You kind of say like that area, right in there, that would be a spot to watch for as well. Now, again, we should be due for a bounce here. Now, the market will tell us what happens, obviously, but we should be due for a bounce. What I would love to get, right, my first favorite would be that failure into pullback combination, right? So kind of a modest pullback, again, into the top of this channel, just get me above the moving average. That's all I really want, right? Get me above the moving average, because when you go above the moving average, that's where you get a chance to catch, unfortunately, inexperienced traders, right? That's usually where they are, right? Buying high. You get a chance to buy or simply sell, in this case, into those stop losses of those. Again, they're probably not all rookies, but you assume that only rookies are doing that, right? Are buying that stuff. Professionals wouldn't dare buy that, right? They're waiting for those rookies to fail. So the reality is that failure, just get it above the moving average, right? Failure above the EMA, and then grab it on the pullback, right, as we go back down again. That will be great. Another thing too, again, is that trend line up top. If we were to really punch, right, get up into that resistance line, now here's the problem, right? Again, I still would love to be a seller, but my momentum is a little bit out of whack now. Leave those, right, give those buyers one, give them two tries. And and again, there's a lot of variations of these different failure patterns. I'm not going to go over all of them tonight, but I will cover so much more, right, in that free video class I talk about in the upper right hand corner. For example, right, I would love to see a trap. Traps above those highs, right, are amazing entries. And remember, once those buyers try twice up here, and they realize they're stuck, right? Once they try twice and we short into those stops or short that trap, this oftentimes will run lower on strength. You don't want to chase it lower. You don't want to sell low. You want to sell high. And a little trap there right before we finish off that retest. Because remember, they're going to want to go in and they're going to want to retest that low, right? That low down there is the big objective. So if it's a much deeper pullback, a stronger pullback, let them try twice, right? Sell into that trap, sell into those stops, and watch that trap, right? Little trap high, their entry on the way back lower. Also, too, don't be surprised if we kind of slide lower here overnight and then end up going sideways. What do we do in a bear market that goes sideways? We find levels of resistance up above, and what do? We wait for that pop. We wait for the pop. We wait for those poor breakout traders to put their money in the line, right, buying that pullback, and we just sell right into their stop losses. Remember, the key on this, though, is if you want to get the best results on trading failed breakouts, look for resistance levels overhead and combine those failure setups with those resistance levels, right? When I was a new trader, I kept on telling myself, buy low, sell high, focus on failures. As I got more experience, it began to kind of evolve into buy low at support below the range, sell high at resistance above the range, and again, focus on those failure setups. So find those levels of resistance. And remember, sometimes those levels of resistance, sometimes as the market goes sideways, my favorite levels are those expanding triangle levels, right? You'll see a lot of those in our trade room, right? We'll draw those lines up above those highs like that, right? And then that's where you get those pops. Buyers come in, right? Try to get long, and you got them right where you want them, right? What are they going to do? They're going to buy into that trend line coming down. That's a great potential short there if we do go sideways. And then obviously going lower here, right? Just like the S&P, there is a ton of open space here below us. 13,000, if this market does accelerate going lower, 13,000 will be an appetizer. That 12,900 area is a monster bottom. I mean, there is profit target written all over that. Maybe not tomorrow, but again, Thursday into Friday. But I'll tell you, if those Fed speakers tomorrow, if they light this thing, if they burn this thing down tomorrow, that 13,000 could easily get hit 12,915 could easily be taken out. Again, right now, would I sell it short right now? No, because again, we're 1, 2, 3 legs down. But if we have a situation where, and again, I can't tell the market what to do, but when the market goes 1, 2, 3 legs down, that usually means we're going to get a pullback, right? And that pullback is usually not a very shallow pullback because bears don't want to keep selling really low. However, if this thing does give us a very shallow pullback, right, and we take off to the downside, now something's up, right? Something's up. If they take off the downside now, what do? You get aggressive, right? No more waiting on these deep pullbacks anymore. Okay, that's what I think should happen right now. But I don't control the market, right? If the market runs lower, I have to then put on my hard hat, right, my helmet, and go, okay, time to go to work. Mark up those swings, find those steeper channels, and find my way in on traps, right, as the market turns into what we call kind of a runaway market, right, emotional market. Something spooks it. It's looking for something else, right? It's no longer engaged in this range. It's now looking for something as we go lower here. So watch those traps, right? Again, if this market disconnects off of this trading range. And then again, just like the S&P, I can always trade a reversal. Reversals are very common in trending markets. I just don't want to predict the reversal. So again, think about a bounce reversal, right? We go up, we come back down, right? We go up, we come back down, we take out that low. The bears get their shorts, right? They take their profit. We see bears try once, we see bears try twice, draw that trend line, find that trap, right? And let her rip. Love that reversal. Again, would I try to pick that reversal right now? Not a very reliable trade, right? But if I can get this thing to go up and complete that retest, again, the bears, they're going to want to short this thing, okay? And if it comes back up, bounce off that low, 1 try, 2 try, yeah, that's a trade I'll take all day. It's a must-take trade in my opinion, especially because that range is up overhead. We may also, of course, right, get this thing to roll lower and then 1, 2 go, right? We may easily see it again go up. The bears get short. They take out that low. Might not be an exact double bottom, right? Maybe it goes a little bit through that low, right? Then comes over. Then we get that 1, 2, 3 reversal. Remember, I'm not going to buy that first pullback, right? That would be crazy. But once we do get that 1, 2, 3 reversal, I can now mark up that high. I can mark up that low. And again, I want the first pullback. Right? I want that first pullback. That first pullback is always the best pullback. Again, this might be a steeper channel. I'm just simply marking up kind of what I'll be looking for tomorrow. That 1, 2, 3 reversal into a hidden channel pullback. I'm looking for trap entries. I'm looking for failure entries, right? Usually failure into pullback combinations off of that low. And I know I'm speaking a different language right now for some folks right now. But again, if you grab that free trading course I mentioned earlier, you'll know exactly what I mean when I say trap, failure, pullback combination. You'll know exactly what I'm talking about there. And then, of course, there's always potentially just about, right, the V bottom. Right, it may V bottom off this low. It may grab that trend line, that moving average, and grow. Right, that's fine by me. I'm not going to buy that first pullback, but I will once I see that 1, 2, 3 reversal pattern. Grab that high, right? Grab that low, and again, your job is to find a way in, right, off of that low before we get back up, right, and retest that high. Should be a pretty good day tomorrow. I'm pretty excited about Wednesday's trading session. Again, I will not be here tomorrow night for tomorrow night's newsletter though, so just be aware of that, please. S&P's done. NASDAQ is done. Get some gold going. Man, I would love to short these highs on gold. Gold was a nasty sideways market today. I say nasty in a good way. I like them a little bit nasty, right? If you know our trade room, right? I like the ranges because ranges, of course, act like magnets. Again, today was a really good example of what happens after a big move in one day, right? When a market makes a big move one day, the market almost has to kind of like tread water for a little bit, right? It's like running a marathon one day and taking a day off the next day. That makes perfect sense, right? This market would go sideways here today. It's a range. And so anytime I have a range-bound market, my job is to use the range as a magnet, which means I'm focused on failures, right? At resistance above the range and at support below the range. And of course, I can trade breakouts, right? Breakouts are also a part of a range-bound strategy. But remember, most breakouts are going to fail, right? Most breakouts are going to fail and go back up into that trading range. The most important takeaway right now, at least that I can see here on the gold chart, is the fact that we are overall bullish before that trading range. But look what happened up here. Right? We've got this rotation off the high, which basically means the market went up and rotated back down. So we're definitely long-term bullish, but as you can see right now, there's a lot more bears in the market right now than there are bulls. So my big thing right now is I would love to short these tops, right? Got that triangle top up there, that channel top up there, that not the high of day, but the kind of the prior, the first high of day up there. That area right there is just, it looks so good because again, you've got that rotation off the high. So I'd love to sell short off those highs. I want to try to stay away from the middle of this trading range, if at all possible. And honestly too, if these buyers, if they can't get their act together here, this thing could collapse because you see what happened here. They got right. They went up. They took out the highs. They rotated down. Now, if you guys watch my newsletter, when you get this much momentum coming off that high, what do? You wait for one. You wait for two. You draw that trend line off the high, off the low, right? I mean, is that not a picture perfect nested entry? I mean, how many times do we talk about that setup on this video, right? I've probably talked about that particular trade 100 times over the past month. So bears try it once, bears try it twice. The buyers are in. Right, the buyers are in. So at this point, if they don't get this thing back to these highs, this is going to roll over, and well, people are going to look at it like a buyer failure, and that's why I think I'm so excited about this short side here tomorrow. And look at look at the wide open space down there because that big move from yesterday. All right, so. Quit the fantasizing, Joe. Let's get some patterns all put together. The most important thing for tomorrow is location. For example, I've got this channel coming down, right? That channel top or that bottom, that high right there. We may only get like we saw back here, right? Where you go up, that failure triggers right inside the range. So a shallow pullback, I'm going to want to get short with a trap. Okay, shallow pullback, I want to get short with a trap here. I love the idea of selling short off the top of that range. The problem though is it's still an overall a bull market right now. And so I will have to respect that. One, try for the buyers. Two, try for the buyers. Trap high, great trade. That'd be a great trade. The other one would be, do we use this high at 74.3, do we use that, right? That trend line. Now that one's a lot easier. I can go up into resistance now. I can get these buyers to try and fail, and I can sell back down into that trading range. And what I would do in this situation is look for that move lower, draw that new channel from there, and hit it again as it collapses, right? It's a buyer failure into it, right? Remember, first pullback, always the bet, right? Always the best one. So again, it's a failure into pullback. Oftentimes these moves lower, will be a trap too, right? Just kind of look at it that way. We saw one of those Monday in our trade room, right? It's a failure into a pullback. But again, think about a little trap entry on that pullback. Obviously, we'll go into more details of that tomorrow in the trade room. But that will be kind of the second type of pullback. And then the third one, because let's face it, the buyers have controlled this sucker, right? If we do take out those highs, that is kind of the best scenario for the buyers, at least unless they break out here right now. Because again, if this thing rolls over here, there's no way I want to buy that thing now. At that point, this thing's dead man walking, right? It's going to be seen as toxic. So if we do run up and take out those highs, I would say, yeah, if we take out those highs, that is a really big stamp of approval for the buyers. It puts a lot more confidence in those buyers. It also gives them a lot more momentum. So you know what I'm going to say, right? Those are examples where you wait for a nested, right? They take out that high, they do their job, they get what they should be getting. That's what they should be getting right now. These buyers should be retesting those highs. If they do, I still want to sell because I'm still in a range. I'm still at resistance above the range. Momentum is the problem though. So let them try once, let them try twice, right? And don't forget, mark that low, mark that high. Again, there's a bunch of variations, right, of these entry setups, and short that sucker. Again, mark up that low, mark up that high, and grab that short, right, off the high of that channel. It's a nested failure. And again, I know I've covered a lot of different failure patterns right now. It's a nested failure. It's basically a two-try failure. 1, 2, hit the top of the trend line, sell those stops, right? Get that first test off of that high here. So, again, it all comes down to, is it a shallow pullback trap? Is it a deep pullback failure? Is it a really strong nested, right? Those are kind of the breakdowns we're seeing right now, right? Last but not least here, well, I shouldn't say last but not least here. Okay, if we're so excited about shorting this thing, what's the plan if it does roll lower? If it does roll lower, there's two kind of basic ways to short this thing. You got to remember though, as we go lower here, that's a good spot to take some profit. So you don't want to sell into that low. What look for is a 1, 2, 3 breakout, which is basically what it is, right? Get a range above us. 1, 2, 3 breakout, mark that low, mark that high. I'm looking for bull trap entries. I'm looking for buyer failure entries off the high of that channel. Or if the bottom really falls out of it, right? We see a big down move there. That is where you definitely know something's really wrong, and you start watching those trap entries, right? You get a lot more aggressive on your entries now. And again, you'll mark up that trap and find that short from there. Don't worry about that big channel, right? But if you can get that channel, great. If the market, again, if it rolls over here, makes a strong run, shallow pullback, barely kisses the moving average, they make that lower low, everybody wants in now on that next trap. And again, a lot of times what will happen is the market it'll roll over, right? Keep going. And if that happens, right, mark that low, mark that high, find those traps, right, and find a way in. That would be kind of that runaway environment scenario we talked about earlier. Again, it's not difficult. It's not difficult to look left and go, oh, okay, better wear a parachute tomorrow, right? That weekend gap, this could easily evaporate if, again, right, we get some Fed speakers tomorrow morning at 10 o'clock Eastern time. So I'm really excited about gold for tomorrow. It's very difficult to be a buyer on this market because even if we do take out those highs, we got to come all the way back down. And you know what's going to happen? That means a lot of momentum. So how do I buy that low? You got to do the same thing right here. Right? Same thing right here. It goes up, comes all the way down. The bears try once, the bears try twice, right? And see how we do that? Mark that trend line, mark that low. God, I love those entries, right? I love those setups right there, right? It's a nested failure with a little bit of a bonus cherry on top, right? That's the same idea. We go up, we come over, tons of momentum for the bears, 1 try for the bears, 2 try for the bears, right? And then back up into that trading range, or it's up, it's hold that pullback, and it's blast, right? I mean, they've got to literally lift off of that high. Remember, a strong move higher is not enough to get me to buy that first pullback. In all reality, this market go through that high, and I'll still be looking to short it, right? 1, 2, back down in. It's not until they can hold that pullback, strong run up, they hold that pullback, right? And we go from there. What do we call that? 1, 2, 3 breakout. You got it. Mark the high, mark the low. First pullback, right? First test is the best test. It's trap entry. It's a failure entry. It's a failure into pullback, into strength combination off of that low. Again, I know I'm talking a different language right now, but I go over all those details of the entry triggers in that free course. So grab that link in the upper right hand corner. As you can see, there's like a brick wall of resistance up here. So just be careful chasing those markets as we go higher here. And, don't be surprised, too, if the market was to 1, 2, 3 going higher here, there's a good chance we see it sideways into a range tomorrow. And that means, of course, you're picking bottoms, right? Buying with those failures below that range. All right, I've taken up way too much of your valuable evening here so far, but as you can see, there's a lot of really great opportunities setting up for Wednesday's trading session. The charts are all ready. Glad to see you are ready. I want to see you there tomorrow morning with me in the trade room. I'll put all of the membership information you guys need either in the description of this YouTube video, or I'll put a big button for you guys below me tonight on the trading blog. So hit that button to get joined up for tomorrow, or grab that link in the description. Whatever you do, though, don't be too late tomorrow morning with the charts all prepped up. And tomorrow should be a great day for a hump day in our trade room. Don't be afraid to call the office. I'm always here. That toll-free phone number is always right to my desk. I've got live chat on the left, live chat on the right. You can always drop questions in the comment section if you got them. And I hope by now you guys have at least subscribed to our channel. I hope you hit that thumbs up button a couple times by now on this nightly newsletter. All kidding aside, though, hope you guys learned a lot. Hope you use it tomorrow to crush the markets. And I hope I'll see you tomorrow right there along with me. Succeeding together in the trade room. As always, keep in touch. Don't be a stranger. I'm always here to help if you guys need me. But until next time, my name is Joseph. Be well out there. Be nice to each other, will you? Again, I'll see you on Thursday night, right, for the next edition of our nightly news. So that's it for me, guys. Adios, amigos. Bye-bye for now.